Hey guys, happy Monday evening, mid-November, halfway through the fourth quarter, believe it or not. And I wanted to take a couple minutes. I'm going to hopefully try to move through a lot of content quickly on the topic of why the 2020 forecast doesn't call for a foreclosure crisis. And if you've been following some of the videos as we move from a market to market history since we moved through this pandemic. Now a lot of the questions I've been facing over the course of the last couple weeks is all about forecast. How's the economy? What are we expecting for the balance of this year? And what are we expecting into 2021? Specifically around foreclosures. A lot of people know that I've spent a lot of time overseeing literally thousands of bank foreclosure sales over the course of the last couple of decades. And the reality is it's always a segment of any market, but I wanted to just cover and share some of my experiences and some of my projections as we move into the end of this year. There's going to be two parts to this tonight. One is going to be plain and simply like, the economics of the situation. How many homes are or do we see scheduled for foreclosure? And then number two is a little bit of advice on what happens if you are one of the homes that's currently in forbearance and some of the options you may have. So without further ado, I'm going to jump in, share my screen here. So here's just a chart. I had shared this in a post earlier, right? This is just to give you a little background on exactly like what does a crisis mean? How do we even define it? When we look back historically, all the way back to 1999, we've seen an average of foreclosures that were in process at any given time across the country of being right around 200,000. When we saw the peak of the market, we saw as many as over 500,000 in the second quarter of 2009. And right now in the third quarter, we had just 23,900 begin. So what does that really mean? Obviously, we have a moratorium on foreclosures right now, so we have a historically low number. But when we look at what the overall average has been, and we've been well below average for the better part of the last 8 years, when you look at the number of homes that are currently in forbearance, we would have to see this number increase literally 8 to 10-fold before we barely made it back to average. So the number of foreclosures that would need to start to get to reach a crisis level is just realistically seemingly impossible. Especially when we look at what the current trends are. When we saw the beginning of the foreclosure, obviously a very large number of homes registered for forbearance. But the reality is at this point in time, we've already seen a very vast majority of all those homes to begin forbearance some of which extended, some of which came out of forbearance without having missed a payment. 500,000 were actually paid off, which simply means more than likely those people sold their house. But the forbearance obviously has not continued. And the only really ones that entered into any kind of problem where they've actually missed a payment or entered into some sort of loss mitigation is this number in the 481,000, and then there were 80,000 that expired that were in a delinquent status. So it's a relatively small number when we look at the overall large number that began back in April. When we look at this number and then we look at the overall health of the market and what types of, what were the differences between today and back in 2010 when we had this crisis, right? The differences were, largely two things. Number one, we have a historically low inventory of homes that are on the market right now. Back in 2007, 8, 9, we had a mounting inventory. New construction homes were being built faster than they were being absorbed. The market just blew up in terms of inventory and then subsequently fell off a cliff as we moved into the beginning of the crisis. Today, we're starting with historically low inventory, and the demand is currently outpacing what we're seeing in terms of supply on the market. Next, when we move into home appreciation, again, back in when the crisis began in 2007, 2008, prices started to move backwards, which basically triggered another phenomenon that happened back in that market where we actually saw more homes enter into a case where we were seeing strategic defaults occur in that period. Actually, there's a quote on that. In 2008, strategic defaults had not emerged as a serious problem, but then they grew stronger as values started to decline and fall off a cliff. And so that's exactly what ended up happening. As values started to decline, we were seeing the number of defaults increase exponentially. Today, we're not seeing that as a reality. We're seeing the largest price appreciations literally than we've ever experienced historically across our region locally as well as across the country. And as a matter of fact, when you look at the price appreciation projections for 2021, even if you look at like 7 out of 7 of these experts in the industry, whether it's Zillow, Ivy Zelman Associates, Freddie Mac, NAR, Mortgage Bankers Association, even if you throw out the high and the low with CoreLogic and Zillow, we're still seeing price appreciation expected between 3 and 6% for 2021. So no real change there. As we move on to, again, supply of inventory, it just continues to decline as we move into the year. And then lastly, when we look at like what's been happening over the course of the last couple of years, this was a really interesting chart to me that Urban Institute had provided. When you look at at where risk comes from in the mortgage market, it really comes from 2 areas. One of which is borrower risk, which are dictated basically by lending guidelines, right? Required minimum credit scores, required down payments, required job history and income verification. And then we look at the other side, which is product risk. And these are things that were accelerated back in, you can see in the timeline, back in 2004, 5, 6, 7, when we ended up having a lot more subprime mortgages come into the market, et cetera, that increased product. When you look at what's happened in the last 10 years, lending guidelines have become much tighter, which lowered borrower risk, and then product risk all but basically was eliminated. We have no subprime products anymore. And so that's lowered the overall risk for foreclosure to a point where it's at the lowest level that it's ever been, right? And so again, when we look at the projections moving forward, a very large percentage of these homes, and this is where I'm going to transfer over to the other, the flip side of that conversation, but a very large percentage of these homes, even the people that are currently in delinquent or in default, have an out because they have far more equity than they had during the crisis back in 2008 through 2010. So that being said, I hope this is informative to those that are concerned about a large number of these, the properties that went into forbearance entering into actual foreclosure, because the likelihood is very low that a large percentage of them will. Further, now as we move into, I'm going to share my screen again and flip over to this page, which I'll actually share in the chat when I'm done. But when you look at the overall, first of all, the number of forbearances is decreasing dramatically. But when we look at what's been happening in terms of the number of homes that went into forbearance, a lot of people were concerned that they're not going to have a lot of options as they move beyond forbearance. A lot of people are concerned they're not going to have options, or they're going to have to pay back all of the amounts that they were unable to pay in one lump sum. Fannie Mae is saying right here, you don't have to pay the entire forbearance amount all at once upon the completion of your forbearance plan. There's a simple thing to remember. If you're on a forbearance, you'll have the option when it comes to repaying the missed amount. You don't have to pay the entire unless you're able to. Simply put, the banks don't want to complete foreclosures, right? They want to work things out with borrowers. They will work things out with borrowers. They will work on payment plans. Borrowers are going to be in great equity positions, so it's going to be equitable and it's going to be in their best interest to work out payment arrangements to catch back up. And that's going to be one of the things that contributes to not seeing a lot of foreclosures. Lastly, right, nearly 2/3 of borrowers have already exited forbearance and remain current on their payments. In other words, they took the option of forbearance as a security, but never actually missed a payment. So bottom line, the likelihood of a forbearance, a foreclosure crisis again, is, as I'm saying, about 0%. If you have any questions, if you are in a forbearance currently or have any questions about the market, reach out, don't hesitate. I'm happy to answer any questions you have. And hopefully this again was informative for you as you move forward into 2021. Thank you so much for joining me and have a fantastic evening. Thank you.